Hello, and welcome to this month's edition of the ESSSuper Investment Update. Pleasingly, in March, global share markets recovered much of what was lost in the first 2 months of the year. The US share market was up 6.6% and the Australian market was also up strongly 4.1%, with the energy and materials sectors buoyed by an increase in oil and iron ore prices amongst other commodities. As Chart 1 shows, significant declines in the oil price during the past 12 months has stabilised and improved, with a 16% increase in the price during March. This comes as the market anticipates the supply and demand for oil to rebalance during the middle of the year. The uplift in oil prices also appears to have helped stem declines in equity markets, as the relationship between oil and share markets has been strong in recent months. The stabilisation in oil and the rebound in the iron ore price over the month helped lift not just the Australian share market, but also the Australian dollar. Chart 2 shows the sharp appreciation of the Australian dollar relative to the US dollar over the month. This appreciation has coincided with the rise in commodity prices, which is broadly positive for the Australian economy given around 60% of goods and service exports are commodity related, and the revised guidance provided by the US Central Bank regarding the pace of interest rate rises. The strength of the Australian dollar over the last month has, however, been a drag on the performance of ESSSuper's unhedged international investments. Against a backdrop of declining growth expectations globally, a number of central banks continue to respond with unconventional efforts to support their economies. Of particular note, the European Central Bank will now effectively pay banks to borrow, lowering borrowing rates to negative 0.4% in an effort to encourage lending and therefore stimulate growth. It remains unclear how economies will respond to these non-traditional monetary policies. Also notable during the month was the US Federal Reserve's revision of the number of interest rate hikes it expects to deliver this year from 4 to 2, indicating heightened concerns about the economic outlook. With strong performance from share markets over March, ESSSuper's more growth-orientated investment options generated solid positive returns. Stronger performers included the Australian equities portfolio, up 4.3%, and the international corporate debt portfolio, which rose 3%. ESSSuper diversifies risk across and within asset classes to mitigate the likelihood of any one market or investment performance dominating the returns of ESSSuper's options. The long-term performance of the ESSSuper options remains in line with our expectations, and the 5-year results are above long-term expected returns. The default growth option has delivered 7.8% per annum over the past 5 years. It's important to remember that superannuation investing is primarily designed with a long-term time horizon in mind, and switching between investment options based on short-term returns can materially impact the performance of your superannuation balance over the long term. ESSSuper will continue to manage the fund's investments to deliver optimal retirement outcomes for our members, and we look forward to presenting to you all again soon.